Massive politics breaks out after the RBI transfers 1.76 lakh crore rupees to the government. Could this money help revive the Indian economy? That's my top focus on the Newstrack tonight. The Reserve Bank of India has transferred 1.76 lakh crore rupees to the government coffers. This has led to a massive political uproar. The opposition attacking the government and the RBI, accusing the Modi Sarkar of raiding the RBI's reserves. Remember, there was the Bimal Jalan committee which was set up, a panel of experts which came up with its recommendation which finally led to this transfer. The Indian economy has been struggling of late. This money could potentially provide the impetus to revive the Indian economy. Will that happen? How will this money be used? Was dipping into the reserve at a time of so much international uncertainty a good idea? We'll look at all of that on the Newstrack tonight. But here is all the responses ever since the RBI announced this massive transfer to the central government.
Now, any suggestion about the credibility of the Reserve Bank, therefore for me, seems a bit outlandish.
Finance Minister Nirmala Sitharaman allaying fears on the independence of the RBI. Just a day after the RBI announced the transfer of 1.76 lakh crore rupees surplus reserves to the centre, an unprecedented amount, 3 times the 5-year average of 53,000 crore rupees, and almost double the amount the centre had budgeted for. With this, the government has got much elbow room in handling its finances. It could help tackle slowdown, provide stimulus, reduce off-balance sheet borrowings, or compensate for shortfalls in revenue collections. Now it is up to the government to decide if the funds will be used to contain the fiscal deficit target at 3.3% of the GDP or use it for other purposes. The opposition is not impressed.
This government, we are charging it of monumental mismanagement of the Indian economy, which is now in a serious crisis. It is not a recession or a downturn. The situation is grim.
The country's economy is very safe in the hands of Honorable Prime Minister Narendra Modi's leadership. So the Congress party and Rahul Gandhi would do well to keep quiet rather than invite all the criticism which can only be laid at their doorstep.
The issue of surplus funds has been at the heart of a tussle between the Finance Ministry and the RBI for many years now. Former RBI bigwigs like Subba Rao, Y.V. Reddy and Viral Acharya in the past have asserted that the consequences can be disastrous. Urjit Patel had even quit as RBI chief over the issue. Bureau Report, India Today.
The opposition is calling this a raid on the RBI's reserves. But suddenly the government has 1.76 lakh crore rupees which could be used to stimulate the Indian economy. Joining us on this big Newstrack discussion, I want to introduce first National Vice President of the Bharatiya Janata Party, Jai Panda, squaring off against him tonight in his capacity as a former banker, Sanjay Jha. Vipin Malik is a former director of the RBI. Sanjay Jha, I want to come to you first because in the quarters where conspiracy theories were doing the rounds, there were amounts that were touted up to 5 lakh crore rupees. That's the amount the government will force the RBI to hand back to the government coffers. Nothing of the sort actually happened. The amount that's been given is far lesser. There is a committee run by a former RBI governor that's done the technical calculation, and 1.76 lakh crore rupees could be the stimulus the Indian economy desperately requires at this time. Why is the opposition so bugged? What's your objection?
Rahul, let's face a few facts. Number one, you are talking about the central bank of the country. This is not a commercial bank, which is driven purely, listed company driven by purely shareholder returns. The second point is this is a daylight extortion, and I'll tell you why. The reason why the former governors Raghuram Rajan or Urjit Patel, even Viral Acharya, a lot of them publicly took the position that you should never compromise with the independence of the monetary policy authority of the country. By basically, forcing this appropriation, there are two signals, Rahul, that are very, evidently manifesting itself. Number one, the government is financially broke, because the big question mark that comes up is, what is India's real fiscal deficit? Because there is already a wild speculation going on that this monies will be used to reduce India's fiscal deficit.
Your revenue projections are too aggressive and overly optimistic, unlikely to be met. The government doesn't have enough money to be able to fund all its requirements, to pay for welfare, all the schemes that have been rolled out. You're having to cut expenditure. Now you've got money from the RBI. These are rainy day reserves to be kept for contingencies. The opposition alleges, Jai Panda, that the government is raiding the RBI's reserves. How do you respond?
It's unfortunate that such such negativity is being spewed without any basis. So let me put things in context. Rahul, as you know, every year the Reserve Bank transfers funds to the Government of India. The issue this year is that it is larger. The second thing is that this is not just an RBI thing. This happens with the Bank of England transferring to the government of the UK. This happens with the US Fed transferring to the US government. There is no robbery. There is no risk taking here. It is within the conservative norms spelled out. And yes, indeed, this money will go towards helping India. It will go towards helping the economy. Now, the economy is still projected to grow this year at 6.2 to 6.4%. And until recently, everybody in the opposition was asking for more steps to be taken. And when steps are being taken, they are criticizing it in a very unfair manner. And while Mr. Jha is presented here as a former banker, everybody knows he represents the Congress viewpoint. And everybody knows that the Congress has come out and started opposing this move. It's just unfortunate.
Sanjay Jha, I have over here a Merrill Lynch comparison of the contingency reserves of the RBI vis-a-vis other central banks amongst the BRIC nations. In Brazil, the contingency reserves are at 3.7%, in China at 1.9%, in South Africa 1.5%, in Russia 1.1%. In India, it is the highest at 6.8%. So there is an economic argument as well that the RBI was sitting on more contingency reserves that it needed, and if some of that is given back to government, used to stimulate the Indian economy, given the slowdown that we are facing, net, it helps India.
Rahul, 2 points here. India faced a very aggravated, a very serious economic crisis during the 2007-8 mortgage problems in America, which we call as the Great Recession. The government of the Congress UPA did not dip into the RBI's reserves. Please remember one fundamental point I would like to tell Mr. Panda, that when you deplete the reserves of the RBI, you are basically also reducing its assets. And the fundamental point, you can't compare one country to another, Rahul. Brazil has gone, financially bust up and down in a hugely volatile performance. And as far as China is concerned, its GDP is multiple times our size. And it's a highly export-led country which has got massive foreign exchange buffers. Now, what we got to keep in mind, and let's be very realistic about it, is the lack of transparency in this government. I'll give you one point and maybe Mr. Panda can respond to it, that the budget and the economic survey of this government showed a difference in tax of 1.76 lakh crores or 1.75 lakh crores, almost the same number. Now, these are, frankly speaking, unprecedented developments.
Ever since the budget numbers were presented, multiple economists have written that the government isn't disclosing the full extent of the fiscal deficit. A lot of the off-budget borrowings done by organizations like the Food Corporation of India are being kept outside of budget numbers. If you add them to the budget numbers, the fiscal deficit goes up beyond 5%. And ironically, the number which was bandied about of how much the shortfall was between what the government was claiming was the level of fiscal deficit and the actual fiscal deficit was 1.76 lakh crores. The opposition says, boss, dal mein kala hai. इतना ही कह रहे थे गायब है उतना ही वापस आ गया आरबीआई से, therefore it's all fixed, मैच सब मिले हुए हैं जी.
Every government, every year, dips into the RBI's reserves. And as I said, it's not an India phenomenon, it's a global phenomenon. The question is the size. The amount is larger this year. And as I have explained, after this transfer also, the RBI's reserves are squarely within the band specified for conservative reserves. And as you, Rahul, pointed out, it is far, far more conservative than most other countries. And that's what savings are for. That's what reserves are for, to be used when necessary for the government.
Okay, I want to get a perspective from an economist. Arun Kumar now joins us. The government will receive 1.76 lakh crore rupees from the RBI. The opposition thinks this is a raid on the RBI reserves. Former governors like Urjit Patel and Raghuram Rajan were apprehensive about it, as was Viral Acharya. However, there are many who are saying that given the lack of demand in the Indian economy, given the fact that the engines of the economy are stalling, this is a much needed stimulus. The government finally has the money it needs to revive the economy. Arun Kumar.
So, we must be clear that what is being transferred. Every year, the RBI gives a dividend out of its income. Income must be distinguished from the reserves. Income is based on, printing of currency notes, on what people borrow from the RBI, the interest income it receives, etc. Now, you know that a 2,000 rupee note costs only 3.5 rupees to print. So, on every 2,000 rupee note that's printed, you get a 1,997 rupees of, extra income. So that is the thing that can be transferred to the government, and that's what is done. 50,000 crores, 60,000 crores, 30,000 crores, that is what is being transferred earlier. Okay, now this year the proposed transfer was much larger at about 90,000 crores. Now, in addition to what you give to the government, you also build a contingency reserve fund, so that if there's a trouble, you have a certain fund to take care of your requirements. The third part is that, you bought gold, say at 5,000 rupees, 10 years back, and today's 30,000 rupees. So that's called the revaluation reserve. Now, revaluation reserve is not something that you can touch, because, then you'll have to sell dollars and gold, etc. That's not a free amount of money that's available. So what has been done is that the new committee said that we must have between 5.5 and 6.5% of the balance sheet in the form of contingency reserve. And that is where it has been pegged at the lower amount of 5.5% to allow the government to get some extra funds of money, plus some other extra funds that are being given. But my problem with that is that it's not as if you're stealing from it, but what is happening is, in a times when the trouble is very high, externally there's a Brexit problem, Germany is slowing down, there's a lot of uncertainty in the oil producing countries, there's trade war, we need to have more contingency rather than less contingency, So, of course, you can, take certain amount of the reserves from time to time, but not at this kind of time when the problem is very high.
So let me get Vipin Malik to respond to that. As a former director of the RBI, at a time of massive international uncertainty, looming trade wars, there's been a lot of talk globally of a possible global recession. You need to build up on your contingencies. This is not the right time to be dipping into your contingency reserves. You earlier had independent economists who are opposing this move. Now you have a former government secretary as the RBI governor. The allegation is he's doing the government's bidding. Vipin Malik, respond.
Yeah, let me raise a question. I mean, you have such a learned panel, and Mr. Arun Kumar was also there. You see, what is the RBI's income bifurcation? One, Mr. Arun Kumar said, was the currency printing, in which out of the 3 rupees cost, 1997 and 2000 rupee note is there. Besides that, there is an income from the selling of the securities of the government, which is central government securities and state government securities. Tomorrow, if Government of India decides to not to allow Reserve Bank to sell these securities, and they say that we will be shifting this business of selling of Government of India securities from Reserve Bank to another public sector undertaking or some third party, will that income will not go from Reserve Bank of India? After all, the major income to the Reserve Bank, from which the reserves have been created, is coming from selling and buying of the securities. So there is, my personal opinion is that if economic capital of Reserve Bank which, I mean, different people have a different, say, 10%, 12%, 15%, or you can gradually build up to 24%, 25%. If economic capital of the Reserve Bank is enough. And 2013, let me tell you, there was a Maligan committee. Besides Bimal Jalan, Maligan committee also said in 2013 that 1,49,000 crores is a surplus which Reserve Bank is retaining and can be transferred to central government in 2013. So I don't see any.
So I want to come now to the second part of the Newstrack discussion tonight. One, it's very clear that 1.76 lakh crore rupees are coming to the government coffers. That deal is done. But Jai Panda, the big concern is how will this money be used? Your revenue collections are under stress. GST numbers not matching target. You're struggling to hit 1 lakh crores. Your massive welfare spend targets also under stress because if your revenue is not keeping up, where will you get that money from? The fear is you've got this one-time booty. Instead of using it as capital expenditure to build public infrastructure for the future, the government may use it for all its schemes because you've got elections in Maharashtra, Jharkhand, Haryana, Delhi. You'll try and use it to win elections. Respond to that.
Well, all sorts of fake allegations have been made, as you yourself pointed out, that there was an allegation earlier that it would be 5 lakh crores, which was not the case. So now there's this new fake allegation that this money will be misused. I'm glad that Shri Arun Kumar pointed out that this is not stealing from the RBI, but he would prefer that it were taken from income rather than reserves. Now that is a very conservative viewpoint. But in normal life, people occasionally sometimes dip into their reserves when they're building a house or something else. And this is exactly that kind of a situation where our reserves are so high compared to all other countries. And the CGRA, the currency and gold reserves revaluation account, has been growing at 25% compounded every year. So we have these huge reserves. And even after taking this for use, we are left with one of the highest and most conservative reserves in the central bank, in our Reserve Bank. So there should be no concern that there is any undue risk taking here. Secondly, now regarding as to what this money will be used, which you just asked, Rahul, just a few days ago the finance minister has announced some very major measures to ensure that the economy remains the fastest growing large economy in the world and goes back up into the 8% range and higher. And one of that measure is 70,000 crores for bank recapitalization. Now we know there is this overhang of NPAs from the reckless lending, sometimes fraudulent lending of a decade ago, which is why there are a lot of NPAs, and to solve that problem, hard measures are being taken which had affected sentiment. So this bank recapitalization was announced in the budget and just now has been committed that the money will be made available right away. So I would imagine that a large part of this will go towards that and other such good measures that the finance minister has recently announced for giving a boost to the economy.
Sanjay Jha, if you look at it from the other perspective, when the UPA was under stress at the time of the banking crisis, the banking meltdown in 2008, what did you do? You came up with a stimulus. You forgot about the government's commitment to fiscal deficit. You forgot about the pathway that had been laid out under the fiscal budget, FRB and Fiscal Responsibility Budget Management Act, and you said, okay, let's spend. You lent money to all manner of people, a massive debt piled up, inflation was spiraling, it created a mess of its own. Here are the RBI's reserves which are being given to the government. The government now has this money it can spend, which is a more sensible way of approaching the current challenge than what Pranab Mukherjee did when you had to face a challenge of this nature yourself.
Rahul, if you go back to 2007-8, can you imagine that was the worst global recession after 1931's nightmarish Great Depression? In extraordinary situations, you take extraordinary decisions. And that, by the way, was taken by all the big economies of the world, that they will all create a fiscal stimulus or what is called as pump priming. But when we spent more, the fiscal deficit went up. It was done in a transparent fashion. Mr. Chidambaram's budgets or Mr. Mukherjee's budgets were not concocted or they were not opaque. They were real figures. Nobody doubted the authenticity of the data, which is why I'm saying that is the fundamental problem here. Point number two.
Answering my question. One second.
That even
I am arguing. Sanjay Jha, you're not answering. Sir, one second. You're not answering my question. My question was, that when you had to deal with a similar situation, you said, okay, forget about fiscal deficit targets, forget whether we have the money or not, let's spend the money. You were recklessly spending money. Pranab Mukherjee created a whole host of problems, some of which are still confronting us because of the manner in which you dealt with the problem. Now, here there is a global challenge. They've taken money which they have with the RBI, transferred it to the government. It's now money that the government has available to spend, which is, it can be argued, a less reckless way of dealing with the situation than what you did.
Not at all, not at all. Rahul, please understand this point. Don't use the term reckless. If a government decides that the country needs to live with, with the battle and economic challenge, and you need the public expenditure has to be higher, the tax collections will not be commensurate, your fiscal deficit rises. But a rising fiscal deficit or a rising inflation, why are you decoupling it from the higher GDP growth we showed? It was an appropriate policy that worked very well, barring the last year. Please don't forget, India was one of the few economies along with China that registered the highest growth rates during the time when the rest of the world, whether it was America or Europe, was bleeding. So we showed growth. The fiscal deficit wasn't reckless. We paid the political cost where inflation was concerned, but economically India was on a strong wicket. Now the point that I was trying to make, please hear this out. RBI also has a credit rating. If a central bank of a country its reserves are being dipped into, and I'm talking about reserves which ought to be in the contingency reserve buffer, not the revaluation reserves. Mr. Panda should know a revaluation reserve is not meant for distribution because it is not realized. So the fundamental point is this government needs to recognize, number one, that it has taken away the independence of the RBI. It had to set up a committee and get a bailout. But the point that Mr. Panda did not answer, India's exports are dismal, the jobs have vanished, private investment is flat, and even consumer confidence and demand is low. I don't know what they're going to do with this money. So you're going to have a double whammy, an economy that is not growing and an RBI that has been depleted. And that's a reality he can't dodge from.
Okay, Arun Kumar, what according to you is the best way now to spend this 1.76 lakh crores? It's virtually a one-time windfall. The fear is the government may use it to meet its current expenditure. All the schemes that they now don't have the money for, okay, you've got the money, spend part of it here. How do we prevent that? How do we use it to create public infrastructure which will create a demand in the Indian economy?
So, whatever money comes into the budget is fungible. You can use it for any purpose. And because, our tax collections are way down, it was projected to rise at 17%. They're rising only at 4.5%. So your fiscal deficit is likely to expand very rapidly. And that's where I think this money is going to go to curtail the fiscal deficit so that it remains within target. Now, this is a political decision that needs to be taken. Are we going to allow the fiscal deficit to rise? And if the fiscal deficit will rise, the question is, today, the CAG report says that the central government's fiscal deficit last year was 5.8%, not 3.4%. Add to that the state's fiscal deficit, it becomes almost like 8.5% to 9%, So a political decision has to be taken as to how much would the fiscal deficit be allowed to rise to fund the public investment. Government has been planning 100 lakh crores of investment in 5 years, which means an average of 20 lakh crores per year. But this year, the capital expenditure, including the public sector, is only 8.5 lakh crores. That means in the last year, we'll have to spend 32 lakh crores, a 400% rise, which is very unlikely. So in my judgment, what we have to do is we have to see, A, where to raise the resources from in this critical time when we need more reserves. Should we go tap the RBI or should we tap other sources of revenue? That's one. Second is, how much should the fiscal deficit be allowed to rise given the dire straits that the economy is in? So these are the two political decisions, and then only can we decide
Jai Panda, final words, because if you just look at the level of government expenditure already, and you extrapolate for the remaining part of the fiscal year, the government's not meeting its fiscal deficit target. That much is very clear according to every economist worth his salt. So the challenge is, will the government let the fiscal deficit slip? Because since Jaitley's time under NDA2, you've been very careful about that, you've been very proud about that, you've been projecting it globally. Or will you use one-time RBI's windfall to fund your current expenditure?
So I think Mr. Arun Kumar has raised valid questions, but I disagree with some of the conclusions he's raising. Now, the commitment to spend 100 lakh crores on infrastructure every year, over the 5-year period, does not equate to 20,000 crores every year, because things are not linear. The Indian economy is growing, whether at 6.2% today or back up to 8% hopefully. Yes, over 5 years. So my point is, it does not have to be 20,000 crores every year. So it has to be. You have to. You can speed it up later on.
20 lakh crore.
I stand corrected. It's a slip of the tongue. But my point, I understand. It was a slip of the tongue. I did not mean to. I meant to say that it does not have to be equal amounts every year for the next 5 years. The total amount can speed up. Let me explain. The Indian economy is growing dramatically. The CGRA that was just talked about has been growing at 25% compounded every year for the last decade. Please, let's keep that in mind. So, to project for the future based on just the current situation is a fallacy. Now, regarding keeping the fiscal deficit in check, Rahul, you are correct in pointing out that the late Shri Jaitley did a fantastic job in keeping it in line. And remember, in the UPA time, there was a lot of talk of doing it, but it was never done. The fiscal deficit went awry, and as a result of that, inflation went out of control. So we have to balance all these different pressures. As I said, since the finance minister has just announced 70,000 crores is going to bank recapitalization, I would imagine that would be one of the first priorities for this expenditure. And for the rest of it, how much of it would be used to keep the fisc in check, how much of it would be used to spend on other infrastructure projects, is something for the government to decide.
I'm going to leave it over there. All we can hope for as tax-paying citizens is that this money is used wisely. If the money is used wisely, it can potentially create a demand stimulus. The government starts building public infrastructure, then industry like cement, steel, iron, all of them will see job creation, will see more growth, which could help the economy. If you spend it unwisely, then it's just money down the tube. Jai Panda, Arun Kumar, Sanjay Jha, Vipin Malik for joining us on this conversation around the RBI's bounty to the government. Thank you very much. We're slipping into a break. Part B of the Newstrack when we come back. Pakistan's meltdown